Hello, I'm Sebastian. Welcome to Nine Nar Trees podcast. Today, I will summarize and review the book, The Bogleheads Guide to the Three-Fund Portfolio. How a simple portfolio of 3 total market index funds outperforms most investors with less risk by Taylor Larimore presents an accessible and efficient investment methodology designed for both novice and seasoned investors. Inspired by the principles of the late John Bogle, the founder of Vanguard Group, this guide simplifies the complex world of investing, providing a straightforward approach to building a robust and diversified investment portfolio. The book advocates for using just 3 total market index funds, making investing less intimidating and more achievable for everyday individuals. Larimore, a co-founder of the Bogleheads community, shares insights drawn from a wealth of personal investing experience, offering readers practical, hands-on advice that emphasizes low-cost and broad market exposure as keys to financial success. By focusing on simplicity and cost-effectiveness, this guide provides a roadmap for investors seeking to balance their risk while maximizing long-term returns. I will give you key takeaways from this book. Firstly, the three-fund portfolio explained. The core premise of the Bogleheads Guide to the Three-Fund Portfolio is the employment of a simple yet powerful investment strategy that combines 3 broad market index funds. These funds typically include U.S. Total Stock Market Index Fund, International Total Stock Market Index Fund, and a U.S. Total Bond Market Index Fund. This approach offers diversification across sectors, international boundaries, and asset classes, mitigating specific risks associated with individual stocks and bonds. One of the primary advantages of this investment strategy is its simplicity. It eliminates the need for constant market monitoring, intricate financial analysis, and emotional decision-making, which can often derail investment goals. The simplicity also offers a practicality that is often lost in more complex strategies that require constant balancing and rebalancing. Furthermore, this model aligns with the Bogleheads' philosophy of minimizing expenses and taxes, as broad market index funds generally have lower expense ratios compared to actively managed funds. The three-fund portfolio emphasizes the importance of holding these 3 funds proportionate to an investor's risk tolerance and investment objectives, whether they are seeking aggressive growth or conservative stability. By doing so, investors can easily manage their portfolios with minimal effort while keeping their financial plans on track. Secondly, advantages of broad market exposure. Investing in a 3-fund portfolio provides investors with exposure to thousands of stocks and bonds across diverse sectors and regions, significantly reducing unsystematic risk, which is often present in portfolios concentrated on individual stocks or sectors. This broad market exposure means that investors are not overly reliant on the performance of any single investment or sector, thus evening out performance swings that can arise from market volatility. Such a structure enhances the stability of investment returns over time, as it balances different asset class behaviors. For instance, while equities can provide significant growth potential, they also bring higher risk, especially in short-term market fluctuations. However, the potential volatility is countered by the bond component, which generally offers more stability and income, cushioning the portfolio during market downturns. Furthermore, diversifying internationally allows investors to tap into growth in emerging markets as well as established international economies, further insulating the portfolio from domestic market downturns or economic shifts. This globalization of investments ensures that the investor's portfolio is not solely dependent on the economic conditions of their home country, optimizing it for growth in a world economy. Thirdly, cost-effectiveness of index funds. One of the distinct features of the 3-fund portfolio strategy advocated by Taylor Larimore is its focus on cost-effectiveness. The underlying investment vehicles, total market index funds, are renowned for their low expense ratios compared to actively managed funds. The low-cost nature of these funds is crucial because it allows investors to retain more of their investment returns. Over time, even small differences in fees can significantly affect overall returns. This emphasis on cost-effectiveness stems from John Bogle's belief that excessive investment fees and costs often erode investor profits. By favoring index funds that track entire markets, investors avoid many hidden fees associated with active trading and fund management. Moreover, the tax efficiency of index funds, due to their minimal turnover, leads to lower taxable distributions compared to actively managed funds, thereby benefiting the investor by reducing their investment-related tax burdens. Additionally, the simplicity in maintaining a three-fund portfolio means that investors do not require expensive financial advisors for day-to-day management, further reducing overall investment costs. This aligns well with Bogleheads' emphasis on retaining wealth and investing with a long-term horizon without the burden of unnecessary financial barriers. Fourthly, strategic portfolio management. Managing a three-fund portfolio allows investors to embrace a disciplined approach toward long-term investment success. The strategy outlined in the Bogleheads Guide to the Three-Fund Portfolio emphasizes the importance of periodic rebalancing, where investors adjust their holdings to maintain the desired allocation across funds. This routine maintenance, conducted annually or semi-annually, helps in retaining the investor's original risk tolerance and investment objectives. Strategically, managing such a portfolio requires an understanding of market performance and being mindful of the tendencies to chase short-term gains or succumb to panic selling during downturns. The book argues that a disciplined investing approach, sticking to one's carefully predefined asset allocation and investment strategy, tends to outperform reactive strategies over time. Adopting this systematic approach to investing helps in removing emotional biases from decision-making, fostering a sense of control and predictability. Investors are encouraged to remain steadfast to their investment principles amidst market turbulence, which protects them from making poor timing decisions that can have long-term negative effects on their financial outcomes. Additionally, this management strategy allows for a highly personalized investment plan that can be adjusted as the investor's financial plans or circumstances evolve over time. Lastly, who benefits from a three-fund portfolio? The Bogleheads Guide to the Three-Fund Portfolio is particularly valuable for individual investors seeking to simplify their investment approach while optimizing long-term performance. This method is beneficial for those wary of navigating the complexities of picking individual stocks and trying to time the market, both of which often result in suboptimal decisions and outcomes. Instead, the guide provides comprehensive advice on capturing market returns through a well-diversified, low-maintenance portfolio approach. New investors can gain clarity and confidence as the book's approachable style demystifies investment fundamentals, empowering them to take charge of their financial futures. The low-cost nature of the three-fund strategy also appeals to cost-conscious investors who understand the compounding effect of minimized fees on net returns over time. Furthermore, seasoned investors seeking to minimize unnecessary complexity and risk exposure can appreciate the disciplined simplicity of the strategy. Additionally, this approach accommodates investors across various life stages. Whether you are a young professional just starting your investment journey or a retiree seeking sustainable income, the three-fund portfolio's flexibility allows adjustments in asset allocation tailored to evolving financial needs and risk profiles. It highlights the virtue of simplicity, suggesting that, indeed, less is more when it comes to prudent investment management. In conclusion, the Bogleheads Guide to the Three-Fund Portfolio is an essential read for investors of all levels who are looking to streamline their investment process while maximizing efficiency and returns. The book is particularly beneficial for those who may feel overwhelmed by the wide range of investment options available, and those who seek to avoid the pitfalls of high fees, complex strategies, and market timing errors. By educating readers on the merits of simplicity through comprehensive diversification and low-cost investing, Larimore provides a persuasive argument for why a three-fund portfolio is effective not only in achieving market returns, but also in minimizing risk. For someone new to investing, this book provides a solid foundation, offering wisdom and guidance to build a sustainable, long-term investment strategy. The clarity with which the author explains the principles of investing allows readers to confidently apply these strategies in practical scenarios, empowering them to make informed financial decisions without reliance on financial consultants. Moreover, experienced investors will find value in revisiting the fundamentals of cost-effective, diversified investment strategies, reinforcing the discipline needed to maintain a balanced portfolio through various market cycles. The introspective insights into investor behavior emphasize the importance of patience and long-term vision that can benefit anyone's life by fostering financial stability and peace of mind. Ultimately, this book encourages a prudent and principled approach to personal finance that resonates with the truth that often, simplicity is the ultimate sophistication through its alignments with Bogle's foundational investment philosophies. If you would like to support Taylor Larimore, you can buy the book through the Amazon link I've provided in the podcast description. After reading the book, please let me know what you think and share your thoughts. See you around.